Hey guys, welcome to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. Guys, if you haven't yet already, consider subscribing. Give me a thumbs up. It really helps out the channel. I appreciate you guys very, very much. Today, we're going to talk about Peloton. I haven't talked about this stock in over 5 months. So this stock, it took a huge correction today. It was down like 20% on the day. If you guys don't know, I'm sure you guys know already. Pfizer came out with a press release or report saying that their illness 19 vaccine was like 90% effective. The CEO came out and basically blew up the stock. Talked about, this is the biggest advancement in medical history or in history in the past 100 years or something. Like really talked up this vaccine that they have. So it triggered a huge rotation in the market today. This was like at 6 o'clock in the morning. So if you were able to get in pre-market into some reopening stocks, you made a decent amount of money. Or if you were in some of these reopening stocks last week, these are stocks like restaurant stocks, movie stocks, AMC, Carnival Cruise Lines was up like 30-something% today, which is amazing to see. So these are all reopening stocks. The exact opposite of what Peloton is. Peloton is a stay-at-home stock. So as you can imagine, if the reopening stocks were massive gains today, the exact opposite happened with the stay-at-home stocks, Peloton being one of them. So first time I talked about Peloton was about 5 months ago. Peloton stock, a buy, question mark. So this was about 5 months ago. I put out this video. It has 739 views. When I talked about this Peloton stock 5 months ago, it was trading for $44.12. Look at this today, $100. It's a $100 stock, and that is including today's correction of 20% down. So roughly $25 cheaper today. Still a $29 billion market cap company. So, if you guys listened to my video about 5 months ago and saw some value in the stock, you would have made some decent gains buying it at $40. And today it is over $100. Just last week, it was up to $128. So make sure you stay tuned to the end of the video. I'm going to show you my cost basis. I'm going to show you, I'm going to just tell you right now, I've been selling out of this stock for some decent gains. I bought in like early in the year before the whole illness situation happened. I was buying in for I think it was like $26, $25, something like that. I was also buying this stock at the end of last year, 2019, when there was a whole controversy with Peloton's commercial. I don't know if you guys remember that, but there was a whole controversy with their commercial. The stock, went down a little bit. I bought in, and then I bought in at the beginning of this year, just before the whole illness situation happened. And then, the history is it was a stay-at-home stock, and this stock just skyrocketed. Went from like $26 up to $130-ish was the high. So I'm going to show you my cost basis. I'm going to show you how much I sold for, and you'll get to see that. If you want to skip to the end of the video just for that, go ahead. But I'm selling out of this stock not because I don't believe in the company, not because I think the fundamentals have changed. I have just over 300% gains on this stock already, and it was a very, very small position, and I just wanted to take the gains and put it in cash or concentrate it into a larger position. I was never able to build this position because this thing just took off. I bought it at like 20-some dollars, like I said, and before I knew it, it was already a $30-40 stock, and I just didn't want to buy in anymore because it kind of took off on me. So, like I said, their Q1 of 2021 fiscal report came out. And it had a really good earnings. The earning report was really good. I'll probably give it like a 8 out of 10. It was really good. Numbers are good. Subscriptions are good. Churn is good. Everything was good, but they did have some negative news in it. I'm going to talk about the negative news in a minute, but just let me give you an overview of all the highlights, the good stuff in Q1. So let me go over this really quick. So connected fitness subscriptions grew 137% to over 1.33 million. Paid digital subscribers grew 382%. Total revenue grew 232% to 757 million. Average net monthly churn was only 0.65. So if you guys don't know what churn is, it's basically the people that do not resubscribe. They try for a certain amount of time and then they cancel. So their cancel rate is less than 1%, which is obviously very, very good at 0.65. Q1 gross margin was 43.4% for connected fitness products. Gross margin was 39.4% for subscription gross margin. Subscription gross margin was 58.5%, and subscription contribution margin was 64%. Q1 net income was $69.3 million, which accounts to 20 cents per diluted share. So they also guided for Q2. In Q2, they are expecting to keep their monthly churn less than 1% again, at under 0.85%. They expect $1 billion in total revenue, and they expect 2.17 million or more ending connected fitness subscriptions. So they're also expecting 300 million or more in adjusted EBITDA. So overall, their report was good, and they guided good for Q2 as well as the rest of 2021. So good guidance overall. Just to give you a visualization, connected fitness subscriptions growing significantly year over year, quarter over quarter. Total revenue also growing up and to the right, quarterly workouts. So everything is looking good overall. Let's look at their financial situation. So capital expenditures were $49.2 million, the majority of which is related to the build out of their New York City headquarters, London studios, and their Taiwan manufacturing facilities. So this is also a positive bullish sign. They are spending money to build out their headquarters, build out facilities, build out manufacturing. So all good news, all very bullish signs of a company that is continuously trying to keep up with orders, building up all their manufacturing and headquarters. Net income was $69.3 million, and they have $2 billion in cash. Also, some good news, they partnered with Chase Sapphire, probably one of the more popular cards from the Chase family. So Chase Sapphire members will also get a $120 statement credit on Peloton Digital and All Access memberships. And Sapphire card holders can get up to $60. So partnership with one of the biggest banks out there and one of the more popular credit cards. So everything is going good for this company. Let's look at some visualization. So the blue is the revenue consistently growing quarter over quarter. Gross profit also in yellow, growing quarter over quarter. Operating income went down a little bit in the Q1 of 2021, but nothing too drastic. Net income, we are positive, so we are profitable company currently, but net income did go down a little bit in Q1 of 2021. Again, their balance sheet, they have, as of June 30th, 2020, they had roughly $3 billion in total assets and only $555 million in total debt. So that gives them roughly a 5x of assets versus debt. So what's the deal? Look at this thing. Basically kind of just fell off a cliff today. You see that drastic line just going from roughly $125 all the way down to less than 90, roughly $95 was the low that it hit today. So it closed today at just about $100, down 20%. So what is the deal? What is the bad news? So other than, like I said, the rotation stocks, people are getting out of these huge growth companies, these stay-at-home stocks, because of this positive news that there's going to be a vaccine coming out probably within the next few months or next few weeks. So a lot of investors are moving their money into these reopening stocks. So it has nothing to do with Peloton itself, has nothing to do with the company. But this guidance that the company did give on their report was a little bit of negative news. As the only bit of negative news that was out there about the company itself. We were incredibly proud to launch the Peloton Bike Plus and the announcement of the new Peloton Tread, an exciting milestone in our history. However, it drove call volumes and unacceptably long wait times, well beyond our expectations, to reach our sales and support teams, which impacted our customer experience. Some of our members have faced extended delays associated with receiving our products or having support requests fulfilled. We continue to work diligently to address delivery and support issues, as we have long prided ourselves on providing superior customer service. We continue to invest in technology, manufacturing capabilities, and people to help us scale and meet the needs of our customers. So basically, the negative news that they came out with was that they are getting overwhelmed. Basically, they can't keep up with manufacturing. They can't get these bikes out as fast as they want to. There's a long wait time for customer service. There's a long wait time for sales. People are ordering their bikes and they're showing up like weeks and weeks later. So here on the website, they had to put out most bike deliveries times are 4 to 6 weeks. Bike Plus deliveries may exceed 10 weeks. So that's just unacceptable. If you want customers to sign up for your product and be excited about your product, you can't expect them to wait 10 weeks for their product to arrive. We live in a society that we want things now. So that is a issue, and that is what I think kind of took the stock down a little bit, other than what happened today. So what are they doing about this? So you see Bike Plus is 10 weeks out. So they are ramping up manufacturing and trying to get these bikes out as fast as possible. They know there's an issue, and so that is something that I like, that they did address the issue. They know what the issue is. They have reached out to the manufacturers to try to ramp up the process of getting these bikes manufactured and shipped. So really, that's the only negative news about this company, about this stock. So now it has really kind of corrected to $100. In my personal opinion, if I was going to get into this stock and I don't have anything in it, I would probably still wait. I think it's just the very beginning. We'll see what happens with the Pfizer, with the drug, with the vaccine, and see if it is going to come out and how soon it is going to come out. And when that happens, I think this stock will even correct more. So if I was not in the stock and I wanted to get a position, I would wait for this stock to go into $90 or even $80. In my opinion, if the rotation continues to happen and the stay-at-home stocks continue to get beaten down, I could definitely see this stock come down into the $80 range. And if I didn't have a position and I wanted to get a position, because I think the company is still strong, I think the stay-at-home workout and the Peloton workout is not going to go away. So if I was going to get into the position, I would wait probably until it gets into the $80, maybe $90 range for me personally. But I have a position in this. I'm going to show you. So here's my position. Cost basis, $26.40. Currently, I am up 284% on this position. And today, it went down roughly 19%. But like I said, I am currently selling out of this position. And so I started selling actually last week at pretty much close to all-time highs. I sold at 125, 127, 128, and 131. So again, the only reason I'm selling out of the position, because you can see I only had I think 10 or 15 shares of this company. It's never a big position, and I just wanted to concentrate my money into something else or put it in cash and wait for another opportunity. So that's the only reason I'm selling out of this position. So guys, if you like my video, if you find some value in my video, give me a thumbs up. Really helps out the channel. I really appreciate you guys. I hope you have an awesome trading week. Catch you in the next one. Peace.